Welcome back to the Dividend Domain. This is episode 5 of the Robinhood series, where I am investing in this Robinhood portfolio until I can eventually pay 100% of my bills through the brokerage. If you can, go ahead and follow me on all social platforms at the Dividend Domain on TikTok, where I post ETF, anything related to yield and investing with the dividends. I post here on TikTok some short hit content, just updates of portfolio. As you would know on YouTube as well, go ahead and take your time to add me on here and turn on post notifications. You'll see this by this time, episode 5 will be released. Let's get into it. All right, let's start with the disclaimer. I am not a financial advisor. The information presented is strictly for entertainment and educational purposes and does not constitute financial investment, tax, or legal advice. Please take your time to do your own due diligence when investing. Don't follow anything I do. This is only my journey, my personal experience. I strongly advise you to seek tax advice or professional advice if you are looking to invest, something that suits your own personal finance. Let's leave it at that. The strategy or the purpose of this series and this portfolio is to eventually have all of my W-2 income invested into here. As of right now, we're roughly about $5,700 to $5,800 in the portfolio. I've been considering maybe floating a bill now. The original goal was to wait to around $10,000 to $15,000 in the account to start floating bills, but I think as of now, it may be time to actually start that. My timeline is about 3 to 5 years to be able to be financially free to where 100% of, I said, my income is coming in. I'm using these assets to pay down margin or eventually take over my bills. So right now with Robinhood, we have about a 5% margin interest rate. I'm taking the growth and value stocks, which is 40%. These will drip back into these assets. If you look online, there's a lot of different methods or approaches you could take to the buy, borrow, die approach. For me, I think it's having more of a hybrid to where we have growth here that will, like, stable blue chip companies and ETFs that are growth, basically tech based, or that's what I'll comprise in this area. For the high yield core, it's more stable monthly income ETFs, cover call based. As you can see, SCHD is in here. I wouldn't necessarily consider it high yield compared to SPYI and QQQI, but the dividend growth you have here, and it's basically, if you're a dividend investor, SCHD is like a dividend king for ETFs. Hasn't had the best track record lately. It's tried and true. And then we have the high yield single ETFs, single stocker ETFs. So that's like BTCI, NVIDIA. That's going to be 30% of the portfolio. These, I would may, like, at some point right now, I may manually drip some of this. Once, like I said, I start taking out margin to float bills, these will be utilized to pay down the margin. Eventually, when they grow large enough, it's going to be able to take over my bills and my lifestyle. So in episode 5, what we're going to cover are a few things. Is a $250 buy, adding 2 new tickers, the dividends I receive, the margin available for withdrawal, the Visa and USDC integration. We'll talk about the portfolio allocations. So let's first look at the 2 new tickers I added. We'll jump on to Seek and Alpha. For the growth section, I added SPYG. Reason being, I looked at a bunch of different tech ETFs, and I do own some in other portfolios. So just kind of wanted to diversify and have some other options. I don't own SPYG. I sold it off actually in the same portfolio, but then I ended up buying it back. So I have it again. Year to date, we're looking at 20% holdings. This loads is primarily technology. Obviously, in most of the funds, you'll see the same companies: NVIDIA, Microsoft, Apple, Alphabet, Broadcom, Tesla, so forth. The difference is how these funds are managed. This is one of the tickers I added for the growth section of the portfolio. Then for the income, I added MAGY. This is a round hill fund off the Magnificent Seven, and they run cover calls on the Mag Seven within this fund. So we're looking at it says here it's a newer fund. It was released in 2025 April. It says 22.5% yield, but that's not true. If you go on the Round Hill website, it'll actually show you that they're aiming for a 35% yield on this weekly pair. So that's the two tickers that I added to the portfolio. And again, it was only a $250 buy. Small. I'm gonna build this slowly but surely as I get additional income, because I do invest into my other portfolio. So this is a side project, and I'm here anything that goes well or doesn't go well with the portfolio, you get to see and make adjustments. So I'm always open to input as well, whatever you suggest. I have it designed specifically this way because I want the hybrid of income and growth, and instead of just making it a full income portfolio. So let's get into the dividends received. It's not much. Again, it's only a $5,800 portfolio so far. So the last week we were looking at about $15.13. Excuse me. But let's see. Let me see. You can see the deposits right here. Here you go. So the deposit was 110 and then 150 right here. So actually, let me take that back because I ended up putting an additional 110 in here, and that's because I'm thinking about floating my phone bill. So I had some money in the checking account that I'm going to transfer the margin I use to pay bills. So I had some money. So I'm already setting up to direct deposit my phone bill from that account. So because it's pulling from that account, I did invest an additional $110 to cover that phone bill. So that is one of the adjustments I will be making, is once that cash runs out in that checking account that I have, then I'm going to start using margin to float that $110. Technically, it's $108 for the phone bill, but just transferred 110 and I bought assets. But with being said, the dividend that paid out was the Yield Max NVIDIA. That was $4.19 on the 19th. And then the 250 I was referring to, I put a $100 deposit, and this is where I bought or purchased SPYG, $100, 0.93511 shares at $106.94. Then I put an additional 150 to add Maggie to this, and you can see it's 2.78 shares of that. So one of the reasons why I chose Maggie, because I do own some other weekly pairs, as you can see in this portfolio, and others, but I wanted something because I could have added blocks, right? I considered adding blocks, and this is a year. This is year price return. So blocks is a negative 3 points, and it's to crypto-based companies, Bitcoin and Ether, mining. Coinbase is within the holdings here. And then you have Mags, which is just the Magnificent Seven. I don't think this one has that high of a yield or a distribution, but you see there's growth in this account because it's just Round Hill's version of the Mag 7. And then to generate the income, they have Maggie, which is the Mag 7, but they do cover calls on this. So this is based off of just price return. And again, take note that it's only been around, as you can see here, since it looks like April 2015. 2025 this year. So it's price return, but since these are cover call income ETFs, we don't just look at price return, we look at the total return, and also looking at YMAX as an option, and that's been around a little bit longer, but we're negative 40. And a lot of it is actually when you buy in on these assets, because obviously if you buy at a peak, they don't recover. They have capped upside because of the cover call. So you want to be able to like either reinvest in DCA or just buy at good target prices, because otherwise, it can be a nightmare or a dream depending. So what we're going to do is look at total return. So as you see, it's a completely different story when we look at total return. Blocks was negative to being positive 14.44%. Mags was like I said, that just confirms what I was saying. There's not a yield or dividend. That's just primarily focused on growth. YMAX was negative 40%, but you see the distributions, it brought it up to almost 6%. S&P is always the benchmark. That's what we're looking at. And then we look at MAGY, we're looking at 27.64%. So although it's a newer, I did a comparison to a lot of the other ones or the options in the market. And for me, it diversifies me away from crypto and Bitcoin. BTCI in my income portion is probably, I think, no, not, it's actually dragging that portion of the portfolio down the most. I think we'll look into it when I look at the percentage, but I'm down the most in BTCI. So this is why I added Maggie. So that's just to give you a little reasoning on the tickers I added. Now, dividends received. So now we want to look the margin available for withdrawal. So at any time, I can pull this 29.10 and 29 cents. So from my Robinhood account into that checking account that I mentioned earlier, of which once that cash runs out, I'll start using this margin to pay that $108 phone bill, right? So, right now, another thing, Visa and USD had an integration. So I mentioned that again, did a quick video of that on my TikTok and YouTube. You can see here. So you can see the highlight, but then I'll talk about it a little bit more on the slides. So recently I just ordered a Coinbase card, a Coinbase Visa to be exact, to where you could select, I guess, either, I think it's, if I remember correctly, it's USDC, Bitcoin, Ethereum, and then there's some assets you could select that you get cashback rewards in. And you can also choose the crypto or cash that you want to pay. So at this point, I have USDC selected because I get 3.5% APY on USDC in my Coinbase account. So any purchase I make, I get 0.5% cash back or card rewards for BTC. So right now, I just got it, made one purchase. It takes, like I'd say, about a day or so. Once that transaction goes from pending to confirm, you'll see the rewards directly into your Coinbase account. And so far, I have additional 12 cents of Bitcoin. I also own Visa in this Robinhood portfolio. So if you want to look at the breakdown of market cap, USDC is a $78 billion market cap, and Visa's a $680 billion market cap. So, and you'll see why I'm mentioning there's so much more to integrating when it comes to USDC and the advantages you get with blockchain. And you can get this information off the Visa website. So I pulled it from there, and some of the advantage you get is redefining the modern settlement experience. It says seven-day settlement windows, improving speed and liquidity for banks and fintech to settle 7 days a week instead of the traditional 5 business day window. If you're not familiar with crypto, or it operates 24/7, 7 days a week on holidays. It doesn't matter. The crypto market is always open. So this is a huge advantage for Visa making this integration, of which why I think they're doing well right now, and they're one of the only I say assets or stocks that I've had been up since I've started this portfolio. So, and if you don't, go ahead. I would suggest, like, if you don't own a Coinbase account, I think crypto is extremely risky, but I'd say safest bet is stick with Bitcoin. First and foremost, educate yourself. I'm just saying what I would do. Again, whatever suits your personal finance goals. But for me, I think it's a no-brainer. You have to have some Bitcoin in your portfolio. All right. And so to finish it off, we've talked about the Visa and the USDC. Lastly, when we want to jump into Snowball Analytics and look at the update on the portfolio. So right now we're at $5,733.98. Our blended yield is 16.94%, and my goal is to bring that up closer to around 25%. But this is breaking down the allocations. I said, like, it was 40% for growth and single, and the high yield ETFs are 30%. The high yield core is 30%. If you look in here, you see out of all the growth I have in this category, Visa's up the highest, which is a 6.91%. And this, like I said, this portfolio is new. So up the most, that's about $31.08. And it's not even the largest portion in this portfolio. So Visa's doing well right now. And then I changed, since I did add SPYG, I changed the allocation. So I want to reduce my exposure to individual stock, and I would rather have most of the weight bearing on the ETFs in this portfolio. So I have 50% to SEHG, and then I have 25%. This is only 0.7%, obviously, because I just added this. So I'm going to get this up to 25%, which means I'm probably going to hold off on purchasing any of these until we get that allocation to where I need it to be. And then for the high yield core, I think I'll keep it at this for now. 15% US SCHD, sorry. And because it's only like a 3.8, I want to say, dividend, compared to these is SPYI is around 11%, is around 13 to, so 50% of this core income. And these either trade sideways or they're slightly positive. So you can see, even compared to SCHD, how to perform. And then again, like I said, you get that monthly, these on top of, no NAV erosion. So that's why these stay in. And I may add, but I think 3 for now are just fine. And like I said, the high yield ETFs, I added MAGY. So far, I'm up 0.22%. And again, I mentioned earlier, BTCI was dragging me down the most. It's down 8%. So almost like 9% in here in the portfolio. NVIDIA's doing well. I'm up almost 4% here. And WHO is up and down. Distributions, but I'm down 5% on this one. But like I said, I firmly believe the underlying hood, and they got a lot coming. I think they're bringing poly to the platform next year, so there's a lot of growth and expansion on hood. For the most part, that pretty much wraps it up. I can get into a little bit more of the portfolio allocation if you want to see here. We could show you the dividend calendar. And the reason why I have this allocation, because I'm looking to increase this right now. Before, I think in the previous video, we were up to $90, I think. But with the higher yield, like the WHO, NVIDIA, Misty, we got rid of. You see a lot of fluctuation in the dividend distribution with these. So they're not that consistent, to be honest with you. That's why you have these cores. And I try to base the income off of this and understand these fluctuate. So it may not seem not much, but it's a $10, and when you have a larger portfolio with more dividends, that percentage can impact, your livelihood. Right. So if you can, I would appreciate and giving me a follow on this page. I'll be dropping this episode. That pretty much wraps it up. I just wanted to give you an update on what I bought in the additions to the portfolio, primarily. And then again, I do post short form content on here for shorts. It's TikTok and Instagram. And then I will be making more long form videos highlighting some of the ETFs, giving a more deep. And if you have any ETFs that you'd prefer for me to do a breakdown on, make sure you comment. And I'll actually add it to the queue. And then, mainly covering what I do buy or I'm interested, but I'm always open to suggestions. So again, thank you for tuning in to the Dividend Domain. Thank you for your time. Good night, good morning, good afternoon, good evening, wherever you are.